Hey everyone, welcome back for another deep dive into the financial markets. Looks like we've got some really interesting stuff to unpack today.
Yeah, definitely. Lots to dig into.
You sent over some reports and articles,
hmm
and just glancing at them, I think we're going to be talking about Jerome Powell and,
Some of the concerns in the Taiwanese markets?
yeah, Taiwan. And also, wait a second, is that a possible upswing in commodities, I see?
Yeah, it's interesting. There are some analysts who are suggesting that commodities could be a good place to be right now.
Hmm, color me intrigued. Okay, well, let's start with Jerome Powell, shall we? So, the markets, I feel like they were, you know, everyone was riding high on that Trump rally, and then Powell comes in with this really cautious stance on rate cuts,
Right.
and it just feels like everyone was expecting maybe a little bit more, especially after the recent rate cut and some of the positive economic data that's been coming out.
Yeah. I think there's definitely this sense of, like on the surface, things seem to be going pretty well. But I think Powell's real concern here and what he's trying to signal to the market is that this persistent inflation is making the Fed really hesitant to cut rates further.
So they're like tapping the brake.
Exactly. They're worried that further cuts could actually make inflation worse, fuel it even more.
Yeah, and you know what? The market did not seem to like that. Not one bit.
Definitely not.
We saw, the Dow Jones corrected itself pretty sharply after what was its best week of the year. The NASDAQ actually broke through some key support levels.
Mm.
And the Philadelphia Semiconductor Index, ouch,
Yeah, that was a big one.
down over 3%. So what do you think this whole market reaction tells us, about investor sentiment right now?
Well, I think it shows just how quickly things can change based on, what investors are feeling and what they're expecting. Like a week ago, everyone was, optimistic, riding high on that Trump rally wave. But Powell's comments kind of injected this dose of reality.
Right, like, whoa, hold on.
Exactly. And it reminded everyone that the fight against inflation, it's far from over.
Yeah. So now we're seeing this flight to safety.
Yeah. You see investors starting to pull back from those riskier assets, especially those tech stocks. They were leading the charge and now they're pulling back.
So reading between the lines here,
Oh.
are we in for a bumpy ride in the coming weeks, months even?
It's definitely possible. I think the market is really trying to figure out what Powell's cautious approach means for the future. Are we looking at slower growth? Will inflation be stickier than people thought? There's just a lot of uncertainty.
Right.
And that always leads to volatility.
Uncertainty equals volatility.
Pretty much, yeah.
Okay. Well, speaking of uncertainty, let's shift gears a little bit and talk about Taiwan.
Sure.
The reports that you sent over, they paint kind of a concerning picture over there, especially with how closely their markets are tied to what's happening here in the U.S.
Absolutely. Taiwan's market is so sensitive to any changes in U.S. economic policy, especially movements in U.S. Treasury yields. When those yields go up, it makes U.S. investments look a lot more appealing to foreign investors.
Right.
Which can mean, capital flowing out of places like Taiwan.
And it could definitely make things a little bit rocky.
Yeah, for sure.
For investors.
It's definitely time to, be a little bit more careful and really consider how much risk you're willing to take on.
Absolutely. Yeah. Watching closely is key. And speaking of things that are interesting to watch, amidst all of this market uncertainty, one of the reports that you sent, it mentioned this potential bright spot, and I thought this was interesting. It said that rubber and plastic stocks in Taiwan, they're actually doing pretty well.
Oh, yeah.
That seems a bit counterintuitive, doesn't it? Given all this, gloom and doom.
It does seem a little unexpected, yeah. But there are a couple of factors at play here. I think the first one to remember is, remember we were talking about inflation? Well, rubber and plastic are often seen as a good hedge against inflation.
Okay.
Because their prices tend to go up as inflation rises. So for investors, they're kind of a way to protect their purchasing power.
So when everything else is getting more expensive, suddenly those rubber duckies and plastic toys start looking like a pretty solid investment.
Well, not exactly toys, but yeah, the underlying principle is there. Think of it more like, the raw materials.
Okay.
The rubber that goes into tires, the plastic for packaging, construction materials, all that stuff.
Right.
Things that are always going to be in demand no matter what the economy is doing.
Okay, that makes sense. But I'm also wondering, is there something specific about the Taiwanese rubber and plastic industry that's making it even more attractive right now? It can't just be inflation, right?
You're right. There's more to it than just that. Analysts are saying that these stocks are actually undervalued right now, meaning that their current prices, they don't really reflect their true potential. So it's
Yeah.
like an opportunity for investors who are looking for value in a market that's all over the place.
So you've got this kind of combination of factors, right? It's a hedge against inflation and potentially these stocks that are undervalued. And suddenly everyone's really excited about Taiwanese rubber and plastic.
Yeah, it's become kind of a hidden gem in a market that's otherwise looking a bit shaky.
Yeah, exactly.
Yeah.
Okay, well, so we've talked about, stocks kind of taking a hit, this interesting development with rubber and plastic. But there's also this bigger conversation happening about commodities in general. And one of the reports that you shared even suggested that commodities might be the place to be right now. What do you think about that?
That's definitely a contrarian viewpoint,
Yeah.
especially since if you look at the Bloomberg Commodity Index, which tracks a whole bunch of different commodities, it's actually been lagging behind the S&P 500.
Huh.
So some people are saying that could actually be a sign that commodities are undervalued compared to stocks.
And here's where things get really interesting. Okay. One of the experts in the reports you shared is recommending, and get this, they're recommending that people actually shift some of their portfolio weight towards commodities, especially under the Trump administration. I mean, that's pretty bold, isn't it?
It is a bold statement. And it's important to remember that not all experts agree on this.
Right.
But this particular expert, their thinking is that the Trump administration's policies, especially all this focus on, infrastructure spending and deregulation, they think that that could be a really good thing for commodities.
So it's kind of like betting on the Trump administration's agenda to have this positive impact on the commodities market.
Yeah, in a way, yes. The thinking is that, okay, if you've got more infrastructure spending, that means there's going to be higher demand for all those industrial metals like copper and steel.
Right.
And then deregulation. That could be a good thing for the energy sector. So more demand for oil and gas.
Okay, so if someone was buying into this whole idea, what kind of commodities are we even talking about here? Like gold, oil, soybeans, all of the above.
Well, it's important to remember that with commodities, just like with anything else, you want to diversify.
Oh, okay.
So, you've got precious metals. Things like gold and silver, those are often seen as like safe haven assets, especially when, the economy is uncertain. They tend to hold their value pretty well or even go up in value when other assets are going down.
So it's like that classic gold rush mentality. People are looking for stability in uncertain time.
Exactly. I mean, gold has a long history of being that kind of store of value.
Right.
And then you have, the energy commodities like oil and natural gas. Those are really influenced by, what's happening globally with supply and demand. Also, political events around the world. And of course, as we were talking about, government policies.
Mm-hmm.
And then you've got the ag commodities, things like corn, wheat, soybeans.
Yeah, are those worth considering as well?
Absolutely. Those are essential for food production, for biofuels. So there's always demand for them. But their prices, they can be influenced by things like, weather patterns, how much is actually being produced, and then also trade policies.
So it sounds like commodities,
Yeah.
with their connection to these real tangible goods and resources, they could be a really interesting way to diversify your portfolio beyond just the traditional stocks and bonds.
Yeah, I think that's a really good point. And of course, there's always risk involved in any investment,
Okay.
especially now. But commodities could be a way to protect yourself from inflation and get exposure to, sectors that might benefit from what's happening politically and economically.
Yeah, it really is. It highlights that there's always, something interesting happening in the market.
Absolutely.
And there are opportunities out there if you're willing to really, do your research and understand what's going on.
Yeah, and it brings us back to that idea of building a resilient portfolio. One that can handle those market swings and still help you reach your long-term financial goals.
Right. Because as we've seen, the market can be a bit of a roller coaster at times.
Yeah.
So how does one go about, building this financial fortress?
Well, it all starts with, really understanding your own risk tolerance. Are you okay with those ups and downs in the stock market? Or do you prefer to play it a little bit safer? Once you know how much risk you're comfortable with, then you can start building your portfolio in a strategic way. It's like putting together a good team.
Okay, so it's not just like, throwing darts at a board.
Right. Exactly.
There's a method to all of this.
There's definitely a method to it. Think of it like, building a house. You need a solid foundation.
Okay.
And in this case, that foundation is your low-risk investments. Things like bonds. They might not be as exciting as stocks, but they offer stability,
Right.
a steady stream of income,
So bonds are like the concrete foundation of your financial house.
Exactly.
They might not be the most glamorous part,
Right.
but they're essential.
Absolutely. You got to have that strong base. And then once you've got that, you can start adding the walls, the roof. And those are your stocks. They have the potential for more growth over time, but they also, come with more risk.
And I imagine, just like with a house, you wouldn't want all your walls made of the same material.
Exactly.
You'd want a mix.
Diversifying is key.
Okay.
And you can do that by investing in different sectors.
Mm-hmm.
Technology, healthcare, consumer goods, even those commodities we were just talking about.
So you're creating like a mini stock market within your own portfolio.
Yeah, that's a great way to think about it. And then to really complete your financial house, you might even think about adding some alternative investments, like real estate, maybe precious metals.
So real estate is kind of like the landscaping, adding some curb appeal,
I like that.
some potential value appreciation.
Yeah, and then precious metals. Those are like your insurance policy,
yeah.
for inflation, economic uncertainty, that kind of thing.
So it's like having a safe room in your financial house.
Yeah.
Just in case things get a little dicey out there in the world.
I love these analogies.
Yeah, well, it helps to make it real.
Right?
So you're saying it's not a set it and forget it kind of thing.
No. You got to stay engaged with it.
You need to make adjustments.
The market's always changing, and your own financial situation might change too.
Right.
It's important to be proactive and make sure that your portfolio is still doing what it's supposed to be doing for you.
Right. Well said. And, for anyone listening who might be feeling a little overwhelmed by all of this, remember, there are resources out there. Financial advisors can be incredibly helpful.
Absolutely. They can help you figure out, okay, how much risk am I comfortable with? What's my investment strategy? They can really make sure that you're on the right track to reach your financial goals.
Great advice. All right, well, as we wrap up our deep dive today, what are some key takeaways for our listeners? What should they really keep in mind?
The biggest thing is that even though the market can feel really unpredictable, there are things you can do to be successful. Stay informed, do your research, diversify your investments, and don't be afraid to ask for help from the experts.
That's great advice. Well, it's been an absolute pleasure unpacking all of this with you.
Likewise.
And to our listener, thank you so much for joining us on this deep dive. We hope you found it informative and maybe even a little empowering. Until next time, stay curious and keep exploring the world of finance.